Today we are going to be looking at digital transformation in the Nigerian banking sector. And we're really going to try and see whether there are opportunities for investments so that by the time you're leaving this place today, you would be able to identify one of these panelists that you can really speak to about your interest in investments in the banking sector. Over the last couple of years, the banking sector has evolved. It has evolved because of the advent of technology. And some say that we in Africa or the emerging markets have been able to leapfrog forward because of the advent of technology. We would look at our landscape, we would look at the regulatory influence, we would look at the gradual uh, the gradual disintegration of the fintechs um, in the banking sector and how they are, taking up some granular parts of your services, and we would look at what the opportunities lie in the space. Um, we wouldn't touch on talents because I know that that is an issue across board. But one of the things that we want to look at is COVID in how it has really influenced the banking sector. And I would like to let each person have a snippet of it for about 2 minutes while you give the audience a little bit about your businesses and so that they understand the perspective from which you're coming. So we'll start with you, Babatunde.
Okay. Good afternoon, everybody. My name is Daniel Awe. I head the Africa Fintech Foundry. It's the fintech arm of Access Bank. And I think I would like to just give a 2 minutes insight into how COVID-19 has impacted on banking. You know, I hear a lot of people say that because of COVID, there has been so much um, involvement of, I mean, there's been so much growth in digital play in banking industry. But I think I would just say that COVID has actually accelerated the growth of digital play in banking. If we look at the e-payments globally in the last maybe 5 years, from data in 2017, the global e-payment was about $3 trillion. And if you fast forward to 2019, just a year before COVID, it moved to about, I think it moved to about $4.7 trillion. And between those 2 years, between 2017 and 2019, year on year, that's about 26% each year of growth on e-payments and digital payments. I mean, when you put everything together. But between 2017 and 2018, there was a dip in global GDP by I think about minus 0.13 or so. Then between 2018 and 2019, there was a dip of about zero point 0.3 in global GDP. But in 2020, the total payments went to over $5.4 trillion, and there was a dip of minus 5 in terms of the global GDP. So yes, you can see there was growth every year, but in the year of COVID, there was a major dip in the global GDP. Yet, um, we can see a significant increase in e-payments, digital payments around, around the banking sector. So that just shows that, yeah, there was a lot of acceleration because there was lockdown. Banks had to innovate how to service their customers. Government has to innovate how to reach out to people with stimulus. Organizations have to innovate on how to sell their products and how to earn their money digitally. So that's just a short intro. I would like to speak about how COVID-19 has impacted on payments.
Interesting. So you have an arm of the bank that is concentrating
On fintech.
on new technologies, or
Yes, because when you look at banking is pure traditional, and when you want to take the traditional banking to the fintech space, you are going to do a lot of work. So what
just
we've done in Access
just
Bank is
hold
that
that thought. He's taking traditional banking into the fintech space. I'd
absolutely.
like to hear your opinion about that, because I use, in terms of, is it supposed to be a competition? Is it supposed to be complementary? Not you, Ashim. I want to hear, because you're going to go in the positive. But Ashim, do you think that it is healthy that the banks are beginning to have institutions to feed into their own system, and therefore competing with the fintechs and the new technologies companies?
Yemi, I think that's an excellent question. Thank you. So, if you think of it, the banking and financial, institutions vertical has arguably been always far advanced when it came to digital adoption or even digital implementation compared to other industries. And I would argue that while COVID, of course, has been an absolute accelerator in the adoption, that adoption was probably more driven by the consumer rather than the institutions themselves, because they had already been digitalizing. What they were lagging, especially the traditional players, were in fact ensuring that their core platforms and infrastructures were also digitalized at the same speed at which now this sudden adoption was happening. You just mentioned that increase in e-payments in a year where there was a global recession. Now, I think it is vital for both the traditional players and the innovative fintechs to find a space where they come together and play together. It's the only way that innovation will work at the scale and the speed and the sustainability that we require it in order for Nigeria and Africa to continue to be competitive in the world. If we look at what's going on, especially in the Far East, Korea, for instance, a poster child for the adoption of very new, very innovative digital technologies. And oftentimes that's being done through open innovation, where traditional players have either a fintech Foundry, for instance, or other platforms and programs where they do invite the innovators in the ecosystem, the fintechs, to come and have open dialogue. I think if we continue along that pathway, the traditional players will certainly gain, but the fintechs will as well, because we can't forget that the traditional players in the banking industry have been there for centuries. There's a lot of structure, there's a lot of infrastructure, there's a lot of experience that the new players can also take from there in order not to repeat the same mistakes or other things.
Yeah, Olumide, I saw you nodding, so I'd like to I'd like to hear your own perspective of that, because I'm sure when you introduce yourself and what your company does, they would understand why I want to understand your perspective of that, and how is it affecting your business, and if it isn't, what have you done in terms of servicing the banking sector?
Hello? Okay. Yes. So I wear two hats. I run a enterprise applications company called Bluechip Technologies that builds out software for most of the banks and telcos. And then obviously, I'm also an angel investor and co-founder in Voltron Capital that's gone ahead to invest in many of the fintechs that we know today, the Paystacks, Piggyvest, Team Apps, and the like. So I said, I think I'm in that middle, right? Because my clients are the banks, but the people I'm backing with my cash are the fintechs. What I actually think the role, when people say things like the fintechs are going to kill the banks, or the fintechs are, you see some stats and talking about valuation of a fintech versus all the other banks put together. I think that's not what we should be doing, because I've not seen any market where the fintechs came and the banks died, right? The banks will still exist. What I think needs to happen, however, is especially, let's bring it back home to Nigeria, right? And I would say some home truths here. Everybody talks about innovation, even within the traditional banks, right? But it's not something you switch on, right? The corporate culture for innovation is not something that's going to change overnight. And I like what some of the banks are doing like what Access Bank is doing with the Fintech Foundry and so on. But it's also not about buildings, right? It's about people. So you can see what was happening in Yaba. All of a sudden, all the banks running to Yaba and opening hubs in Yaba. That's really where it's all welcome. It provides some co-working space for people to do, but it's not about buildings, right? It's about the people and the collaboration. So sometimes what I advocate for is corporate venture, right? There's no reason why certain banks should be building certain products, right? It's not in your DNA. In fact, it looks funny sometimes when you see certain banks introducing certain digital products. It's just off-brand. What I think needs to be happening is certain corporate venture, and how much is it really going to take, right? When we invested in Paystack, the first round was about $1.2 million or something like that. Every bank can write a check like that, right? There's no reason for a bank to go and build necessarily its own platform. So I think corporate venture is really where some of that collaboration needs to happen, and I'm glad that some of the banks are taking that step today.
Okay, in terms of, Nia, I'm coming to you because we're talking about collaboration, corporate venture, and from a regulatory standpoint, the federal government is looking at how to, make inclusiveness better. And I think that was the reason behind, or one of the reasons behind e-Naira, as it were today. But there are some schools of thoughts that the e-Naira is a platform that is competing directly with the banking sector in itself. So a regulator, in trying to solve a problem, is now in competition somehow with. What are your thoughts about that? Right. And don't forget to say your background.
Right, thanks, Yemi, and good afternoon all. So I work with Verraki Ventures, or Verraki Partners rather. Verraki Partners is a business and technology company. We basically do advisory, technology, and ventures. And that's after 25 years with Accenture at Anderson. And I realized that national companies and small companies will require the kind of experience and capabilities that one has gained from Accenture. And so deliberately, we've positioned Verraki to be able to work with small companies, national companies, and also multinationals. And so that's why we do ventures, in addition to the things that we do. So the central bank is responsible for the legal tender, for the legal currency, whether it is in the paper form, or it's in the electronic form, or in the crypto form. And I think that's basically what the CBN has done. And so when we had the paper, or when we started with the paper currency, those were issued by the central bank. Later, the central bank invested in the clearance and automation system just to enable that process. Later, the central bank, working with the commercial banks, funded NIPS. NIPS being a 50% shared service owned equally by both the central bank and the commercial banks. So there has been a history of the central bank initiating certain changes, of the central bank leading certain innovation. And I think the way the e-Naira has been introduced follows that same path. And sooner than later, the retail banks, the commercial banks would do the heavy lifting. But right now, CBN is trying to define the boundaries and set the pace, and to make the initial investment to ensure standardization, because you don't want different banks doing different things. So I think it's part of this overall CBN framework. But to your question around how has COVID impacted, for me, the major thing I've seen is the adoption of cloud first by the commercial banks. Pre-COVID, a lot of banks were doing mobile, but in terms of infrastructure, they still would prefer to have it on premises, prefer to have it in their own data center. But when you had a lockdown for 2 months, when nobody could move, they realized that, well, if our emails could be in the cloud, perhaps these other applications could also be in the cloud. So in the last 1 year or so, we've seen a number of our clients now that have become both mobile first and cloud first. You've seen a number of customers, public sector customers, who also have now embraced technology. I mean, I have a senior friend who pre-COVID was always signing checks, but now he does online banking because he was afraid of security. So both customers and banks have changed due to the impact of COVID-19.
Okay. So from the brick and mortar banks to digital banks and open banking, I would want you to share, what foreign companies need to know when they're investing in fintech startups, in something like what you're doing. What do they need to know? Where do they need to put their eyes, so that the partners here would see how they can collaborate with you?
Yeah, I think it's an interesting conversation. Going back to a question from a young lady, I think a young man or something, that said we have more investors from the foreign space than the local Indian investors, and that's probably that's actually the balance we have. I mean, you see a lot of foreign investors seeing what the local investors are not able to see. And I will easily tell you that from the last economic summit that was held in Abuja, we realized that Nigeria has the highest return on investments, about 35 to 40%. And for those that also put money in Paystack, I'm sure they can easily tell you how these things go. We have a huge population in Nigeria, and we still have a very, very big room for growth in the fintech and any startup business. I think we are just starting. We've not even gotten to 30% of our capacity. And when you look at the rails on the continent, Nigeria is a very powerful force behind the after. And whatever business you invest in Nigeria, it gives you an opportunity to scale across the continent. So these are things that they are things that you can put a huge bet on, because when you look at people talking about a fintech worth $1 billion, $200 million, $500 million, it's a bet, and say, you know what, this business has a capacity to eat this value. That's actually what it means. And I think for those who have put money in those startups, we've seen a very good return in some of them in terms of the outlook. So the Nigerian market is very big in terms of market size, the opportunity, and Nigeria is also a very good technology adoption country. We were probably one of the first to launch interbank payments on the continent. And I remember that I went for a conference, and Federal Reserve came to exhibit their interbank payments. That's probably 10 years after we started doing interbank transfer. So it's a market that that adopts innovation, and the return on investment is very high, and the opportunity to scale is huge.
Yes, but there's been a lot of skepticisms from foreign investors because of policy changes, that are epileptically, made in Nigeria, and it sort of destabilizes investors, really. What role can the government play in creating opportunities for investments in the banking sector? Olumide, are you able to? Yes.
I think, Okay, CBN is the regulator in the room. The key thing is the government needs to, I think it's both sides. On the innovator side, right? There is this tendency for innovators and even startups to stay in their own corner, right? And say, hey, the regulator doesn't like us, or the regulator doesn't understand us. These guys don't get us, right? And then try and start building without consulting. And I think that's where the hammer has usually come down on some of the companies, even in our markets, right? So they are innovating and they go ahead and there's no consultation that's happening with the regulator. And I think the regulator also, I mean, they have, if you look at some of the talents that have moved over to the regulator side, there are people who used to be in the private sector side, so they get it. And those are the kind of people we actually need more in the regulator space. There needs to be more consultation. And I think when some of these fintechs innovate, because innovation will always go ahead of regulation, right? When these innovators go ahead and do something, I think it also needs, the approach needs to be more, from the regulator side, needs to be more, okay, this is what you have done wrong, right? Let us revisit this theme or what you are trying to achieve and build a sandbox or build out some things that can make this work. Not, hey, the hammer has come down. Because I remember, I think the hammer came down a few times this year, and investors calling to find out, hey, what's going on here? Is this the position of the regulator? Even something like even the Twitter ban was interpreted in several ways by investors. But the interesting part too about even some of these things happening, right, is, and Daniel did allude to it, the size of the market dwarfs some of this, any pessimism in that any investor might have. I think we've seen already in this, Nigeria has seen about $1.27 billion already in the startup space in the first 10 months of the year, right? So yes, some of the regulatory, some people might argue that some of the regulatory landscape has not been consistent, but I think on the other side, you would also, there will be some proponents that would then say some of the regulators have actually created some interesting frameworks for fintechs to thrive. Like the SEC has created a new category for fintechs to register as digital stockbrokers. The central bank has created things around open banking as a sandbox. But I think the two people need to be closer. That's the bottom line and where I'm going to. And not everybody saying, hey, these guys don't get us, so we're just going ahead to build our stuff.
Yeah, you sort of echoed some of the discussions that went on this morning where I usually said that, you know, we need to sell the benefits of all of our innovations to the regulators so that they're not playing catch up and they're not going back and forth. And then also, I think Soji mentioned that there needs to be transparency, explanations to the ecosystem about why these policies are being implemented and create more awareness in that wise. Ashim, I wanted to let us talk a little bit about the advance in fintech from an investor's standpoint. You know, in terms of the investment landscape, you know, what are the threats, the hidden threats that the companies can anticipate, you know, with regards to investments?
Okay, thanks, Yemi. I'd like to add just to what Olumide said.
Yes,
I think everything that you've touched on is absolutely true, and I think I cannot emphasize sandboxing more. I do believe that not only is this now being driven by the regulator, but also there are some really exciting companies who are bringing out some SaaS to, in fact, enable and help the regulators to be able to deploy such sandboxes. So I do think that we will see more of, you know, the fintechs having that open dialogue with the regulator and being able to, you know, in advance of rolling out, actually already have tried out and tested. So I think yeah, absolutely on the nail on the head. In addition to that, I think governments, so not only the regulator, but governments in general, do need to focus more on research and development. This is a huge underfunded space. There are some governments that are doing a great space. We heard of Enugu, state that's doing great stuff. Lagos State, of course, is doing a lot with LASRIC, for instance, but this really is something that on a federal level needs to be targeted more. We do need to see more patents coming out of the country. We need to see those patents protected by the government. And with that, we will continue to drive innovation and also to drive investor confidence in the country. And so speaking about investor confidence, so I'm currently the managing partner of Terra Capital, and we're an early stage venture capital fund focused on, of course, as everybody else, tech and tech-enabled companies, Pan-African. But I think some of the things that we look out for, and I will say that in our portfolio, probably 70% of the companies are fintechs, and that is not only because of appetite, but also simply where the availability and the trends sit currently. But threats that we look out for, I think, of course, licensing and this regulatory framework continues to be a threat, not only in Nigeria, but across the continent. So it is something that we do see. In Francophone Africa, for instance, there are a lot of different challenges that Anglophone Africa, for instance, doesn't deal. So I think as investors, it's also great because we do oftentimes have a Pan-African perspective. So we can help educate fintechs as they're on their journey, because these regulatory pitfalls or hurdles can be a real thing. I think other threats continue to be innovation. So there's a great book by Peter Thiel, which is titled 0 to 1. And the thinking in the book goes that, if we continue to just do what we're doing, then we do 1 to N, okay? So companies scale and grow, and that's 1 to N, but it's really just duplication. But where the innovation sits, that's 0 to 1, right? The real invention from going from nothing to something. And we cannot forget that while the fintechs may have or may currently sit in the innovators box when we compare them to the traditional banks, there is still somebody coming right behind them, right? So looking at your market and really understanding your competitive landscape and knowing that, we've got to have our eyes wide open because there are still other innovators out there. There are new technologies. I mean, we talk blockchain, we're talking NFTs, we're talking metaverse, which is, of course, now a buzzword thanks to Facebook. So really important as fintechs to keep their eyes open, because not only are the traditional players not sleeping, but the new innovators are also equally not sleeping.
Yeah, I saw you nodding your head. Are you saying that, would you say that the industries should be aware that the development in technology is not maxed out? I mean, what are your comments?
I think absolutely. History has informed us that the only thing that is constant is change, and technology itself will continue to evolve. From the first industrialization to second to third, and now we are talking fourth. And so the changes in technology will continue to impact the industry. But for me, I think the comfort is that there's huge opportunities in Nigeria, even as we still have banks and we have fintechs. Financial exclusion is as high as 36-38% of the adult population. Credit to the private sector in Nigeria, it's about 12%. Right? If you compare that with South Africa, credit to the private sector in South Africa is about 141%. It's about 119% in Malaysia. These are economies that are almost about the same size as Nigeria. And so here we have credit to private sector is 12% versus 141% versus 119% in those other climes. So that tells me the opportunity is still massive, right? From lending, from payment, from remittances, investment, etc. Now, if you underlay that with the technology adoption, No, we have 4G network, but 26% of Nigerians are still not covered by 3G. Right? 3G coverage is about 74%. So you have 26% that are not covered. We have more than 50% of us that don't have access to electricity. So that just tells me the many that are neglected, either financially or digitally.
Yeah.
And that for me presents opportunities for fintechs, for innovators, for banks who can design a product for that market. Because it's not the 1%, it's not the 10%, it's the bottom, as it were. And that's innovation. And I think technology will get us there.
Yes, because I see a lot of the payments, the loans, the credit applications that are going on that are being innovated is really directed to the bottom of the pyramid, without giving out trade secrets. Are you looking really at inclusive banking? For the financial inclusion, unbanked, banked. How come the fintech companies are able to access and develop applications or models that are working to have inclusivity? Do you play in that space? Are you looking to play in that space? No trade secrets, but hey.
Well, it's not about issue of trade secret. This is a forum where we are sharing knowledge and also giving some insights. So if I give the trade secret, you might not be able to implement it. so yeah, when you look at the financial inclusion statistics, over 36% are excluded. And there are two things that you have to consider when you're looking at this space. The cost of serving these people, very, very important, because there is a reason why some of them are, I don't want to go into detail, but there is so many reasons why some of them are excluded, like Yemi, am I correct? Niyi, sorry. Like Niyi said, some they do not have access to the right infrastructure. It could be power, it could be their social status in the economy, etc. So for us, we are very interested in the markets and we have to be very strategic about it. And that is one of the reasons why someone like me is employed to look at an intelligent way we can reach out to these people. And number one, the growth of agency banking in the last 2 years, especially after COVID, has been very phenomenal. So that is one area that has actually helped with the excluded people from the financial services. Then, from a strategic perspective, I sit in a space that look at fintechs, and we have some guys that are playing in that space who are part of our portfolio. So instead of us as a big bank to go into that space, spend so much money, we give them the opportunity to do it. We support them with infrastructure, with technology, and some other requirements to succeed. And we act as their financial support. So this is where you see the collaboration that works. And as an organization, as an institution, from a social perspective, we see it as a responsibility to include everybody in the financial space, either due to your geographical location, your social status in the community, or wherever it is. We offer services to everybody, and that is how we play in that space.
Yeah. Okay, we've talked a lot about the fintechs, right? And we're looking at digital transformation. Is it only the fintechs? Because it's as if we're talking about digital transformation and we're talking about fintechs. Is it only is it only the fintechs that can be disruptive in the banking sector? I would really like to hear from Ashim, Olumide, and me.
Certainly not. Certainly, all the players in the financial sector can be disruptors, and I think have been and continue to be. We can't forget that, Africa as a whole absolutely still is ahead of, a lot of the world when it comes to, for instance, mobile banking. If you're in Europe, it's not even a thing at all, right? And that is not because they don't have the technology, because clearly they do, but it is simply just not something that is being adopted or even pushed for adoption. So certainly disruption will continue to come from all players. But I think it's important to talk about how that disruption is happening. And it goes back to the core of digital transformation. And we've got to really understand that digital transformation is not only about technology. It's about the processes, it's about the people, it's about the infrastructure, and everything else. So a good point Olumide made earlier, I think it was, where it was mentioned that we've got to make sure that corporate culture goes along with the innovation. If we don't have a culture where people can innovate, or people have space, room, time to innovate, it's just simply not going to happen. If we don't leave our egos at the door sometimes and are happy to sit at the same table with some of these the small boys, or who are these guys, right? It's really important, because otherwise, you don't even know what's going on out there. But the most important point here, I think, is that we must continue to leverage data. And this is actually something that, at least from an outsider in perspective, I don't feel that the traditional players are utilizing sufficiently. The fintechs have started. There are a lot of startups out there that are doing this. Data science for Nigeria was here earlier, talking about deploying data scientists into organizations. This is a great way to really look at, what does my data say about my customers? Where is my customer? Who is my customer? What are they consuming? When are they consuming it? How are they consuming it? Are these products really working? We've got to remember that it's not only about, advancing these things, or, saying, okay, we have a great innovative product if nobody's going to use it, right? Where's the product market fit? Have we tested this? Have we actually made sure that it's been validated? And then when we're getting the data, what do we do with the data, right? Do we know what's driving our NPLs, for instance? So really important that the traditional players use that data so that they continue to be disruptive in the industry.
Thank you, Ash.
I think she captured it aptly. So when you look at what the fintechs are doing in the financial services, not just banks alone, the fintechs seem to take a function of a bank or any financial services player, unbundle it, and then do it very well, right? So for example, savings. I remember when the guys at Piggyvest started helping millennials save. Everybody was like, I can just put a direct debit on my current account to move money to my savings account. What is new about what they are doing? And then now, over 2 million users later, people get it. It's the convenience, and they've unbundled that function of a bank and made it better. Or when Carbon started taking lending, right? Lending is a core function of a bank. But these guys say, okay, we're going to take lending, we're going to use data to inform who we lend to. The banks obviously have always been lending. That's what the banks were set up for. But then these guys took lending as a core function of a bank, unbundled it, used data to be able to predict who to lend to, so they can start saying things like, do you know that people who hardly charge their phones are likely to default on loans? If people that have their phone batteries at 5% are most likely to default on their loans. So you can start looking at some of these things and provide that function. The same thing even with investments, right? Some of the folks today there are different asset management firms out there today. But how many people access those asset management firms? But some of the fintechs have taken that core function and have allowed people to start investing in stocks and so on. So I think what really happens is that unbundling and then using technology to provide that service better.
Thanks, Olumide.
Sure. I think the way I look at the financial services value chain, right? So there's a front office, there's a middle office, there's a back office. And today it appears digital transformation is focused on the front office, which is about how you engage with customers, how you sell loans or savings and investment and co. And what the fintechs have shown is that they have a better understanding of what a certain segment of the population is looking for. The young, up and going, urban, t-shirt wearing, only 20,000 naira in my account balance type population. They want convenience. They want to be understood and served in a personal manner. And I think that's what the fintechs have used technology to do, to gain a better understanding of the consumer and serve in a personal manner. But I expect there will still be a lot of transformation to come in the middle office and in the back office. So, for instance, digital onboarding, digital KYC. We're beginning to see some fintechs in that space. That it's a huge opportunity. Workflow optimization. How do you ensure that business controls does not come at the expense of consumer convenience, which is where a lot of banks are failing because they focus on controls and it's bank first as opposed to the convenience of the consumer first. So if you break it down based on those three, front office, middle office, and back office, I think now focus is on front, but there are opportunities in the middle office and there's opportunities in the back office. Front office allows you to grow revenue. Middle office and back office will allow you to tighten your expenses, and that's when you begin to focus on the bottom line. So that will come.
Thank you, Nii. At this point, I would like to, I can't find the MC, to see if there are any questions from members of the audience. We've heard about other uses, other types of digital transformation used in the banking sector, other than the fintech, the back office, the front office, and the middle office. We've heard about changes in demography. We've heard about the data and how we use data, how we leverage on data to enable us, how we need to leverage on data and how the banks, I would like your comments on that, how the banks are not using enough of the data they have, which is a major asset, how they're not leveraging it, and how but are there any questions at this time? Okay, thank you.
Good afternoon, David from Jobberman here. Quick question, I don't know who in the panel this is for, but around the current entry of the telcos into the banking space, what sort of impact would this have, especially on startups at this time?
Okay, who would like to take that? Nii?
You're referring to the PSB license? Right. So, my view is it's CBN's objective. One is to protect the banking industry. Second, to improve financial inclusion. And because of that, the nature of the PSB license that has been granted is such that they are not permitted to issue credit. They are asked to deploy agents and kiosks in rural areas and less in urban. And so from that perspective, I think it's pretty much complementary. The telcos today have better reach, a wider network based on their agents, based on their telecom services than the commercial banks. And second, they've also learned how to do things in a cheaper manner. They don't have the legacy, legacy of brick and mortar branches in a lot of rural areas where banks have closed those branches anyway. So my sense is that at the initial stages, PSB could just be the way to get more people into the financial services. And as they then graduate, they then can move to MFBs, microfinance bank, then they can move into retail banks, etc. But I think a more fundamental question is really, is financial inclusion due to lack of access or due to lack of economic power? Because if you look at the financial exclusion data, it's about 38% of the adult population. Meanwhile, our unemployment rate is about 34% of the adult population that's unemployed. If you add the 3% of the aged population above 65, so that's about 36%, sort of, which is not too far from the 38% that is financially excluded. So is there a nexus between economic activity and financial exclusion? Could it just be that the guys who are financially excluded really don't have any economic power? Because if they do, then perhaps they will have some savings around there. That's a question. But ultimately, I think what the CBN has done, the kind of license they've given, the boundaries that have been defined, has limited the PSBs to savings mobilization, focus on the rural areas, and then could be anchors to expand the net and bring in more people into the financial sector.
Thank you. Do we have one more question? If not, I'd like to say a big thank you to Ni from Verraki, who takes care of indigenous small and medium companies. And largest, I shouldn't cut that out. Olumide, who has had a slice of paystack, if you all heard about it. And he's also an angel investor and provides digital transformation services to the financial institution. Ashim Egunjobi is an advisor and an investor. And in her previous life, she used to run tech experts and built a lot of talent in the ecosystem. Babatola from Access Bank, who is one of our sponsors. And I'd like to thank all of you for coming and staying really throughout this day too, and sharing with us on digital transformation in the banking sector and the opportunities that abound. Thank you very much.